You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Venazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that rocking bit of tunage means it is time to rock out with the Option Block. My name is Mark Longo from the old OptionsInsider.com, as well as from the Options Insider Radio Network. Happy to be back in the old Chicago studios here after a nice sojourn to the South for the Futures Industry Association Conference. Always a fun shindig, and I got to admit, not the worst thing to have to go down to sunny Florida when it's on the heels of a polar vortex here in Chicago. So there are worse places to be. Interesting stuff. By the way, we're coming at you with a whole new behind-the-scenes buckets, the bolts of the system here. They upgraded our entire building here with a whole bunch of new internet infrastructure here. So we're supposedly coming at you with a whole heck of a lot more pipe these days. So maybe we can explore some interesting, fun new things to do with all that excess bandwidth. But in the meantime, let me bring on my rotating cavalcade of characters who join me here on the old program. By the way, of course, Monday and Thursday, noon Central, 1 p.m. Eastern. Get it live or get it after the fact, wherever you get your favorite podcast programs. Let's start off. Let's go out to the hinterlands of Maine, where he's waiting patiently to join us. He is the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program, sir.
It is a huge pleasure to be back. Usually Mark is here on Monday. I'm taking the Monday, so I just told him I'm taking the Monday, and I kicked him off the show. There you go.
You know, that guy's getting a little, he's getting on to all the shows here. He's creeping in all over the place. It's good for you to push back on him every now and then,
I do. I heard that he likes to hear himself talk, but I'm not totally sure.
I don't know if that's true. We need more evidence before we can conclusively determine that one way or the other.
Yes, sir.
I hear he's even chiming in on his wife's fashion blog now. So the guy's all over the place.
Yes,
the guy's crazy.
He is.
The guy's crazy. I don't even want to know what his fashion sense is because it terrifies me. All right.
It is a little terrifying.
Let's move on quickly from that to a much more quiet, much more tranquil, much more peaceful place. It is St. Charles, where we are joined by Uncle Mike Tussaw from the appropriately named St. Charles Wealth Management. Uncle Mike, how goes the managing of wealth in St. Charles, sir?
All goes well, and it's I'd actually be kind of curious to see what Seabass puts on in his wife's fashion blogs, quite honestly.
Well, that makes one of you at least. So there you go. Audience of one. Always exciting. It's always good to work for an audience of one. And last but certainly not least, joining us now for the second time Holding down the Fidelity hot seat this week, he is Trey Jarrell from the Fidelity Trading Strategy Desk. You know, Trey, it doesn't roll off the tongue. I want to say strategy desk, but I have to throw trade. I don't know trading strategy desk seems like a lot, doesn't it?
Yeah, it's a little bit of a mouthful. So maybe we can work on it. But the whole point, we wanted everyone to know that anything to do with trading here was is our cup of tea. So, happy to be back today. I got a couple of days off at the end of last week to enjoy TPC at Sawgrass just outside of Jacksonville. I did my best today to convince management that my being on vacation was the correlation we needed to push the S&P up. Haven't had any luck with that, so back at the grind.
Well done. I do know what you meant last week when you said bring some cold weather. It was pretty warm down in good old Boca. It was unseasonably warm, some might say. So you guys getting the heat, we're getting the cold. I guess everyone's happy or perhaps upset as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we talk about what the heck is trading? What is going on out there in the world of madness that is the markets? Kind of a weird, kind of mixed day today. Everything kind of started with a little bit of a boost, a little bit of some green on the screen. Then we kind of started giving some of that up. Some of them, like the Dow, I believe, went red for a bit. Coming into the start of the show now, everything's kind of back to unched to slightly up. The Dow is almost exactly unched. The NASDAQ up ever so slightly, and looks like the S&P up about 0.2 of a percentage point. And of course, all this mixed action meant the VIX was up a little bit earlier in the day. It got up to as high a little bit. VIX cash got up to 1378, about a little bit past 11 a.m. here. And now it's coming back off that down to about 1320. So it's a weird kind of mixed, funky day out there. So let's go back in reverse order, see what's lighting up everybody's tape. Trey, we'll start with you. What is lighting up your tape over there at Fidelity's Trading Strategy Desk? I'm going to keep practicing that till I get it all right.
Yeah, no, that's perfect. Thanks. Yeah, a couple of things pulling up today. Started out by taking a look at our orders by Fidelity customers. A couple of usual names came through. Boeing's been day in and day out. Looking at that level around 367 appears to be continuously holding support. So I think we have some clients still interested in that. Amazon popping up today, breaking above the 200-day moving average. And common theme, every week we're bringing up Tesla. It just always seems to be in the news, falling in our top 10 here as well, sliding a little bit today. The name that popped up today, though, that probably was a little bit more of particular interest to us was Facebook. One that is in and out of our top traded, but don't feel like I've seen it in a little while. Had a couple of analyst downgrades here this weekend, and we see price reacting here today, down about $5.75 here right now. A couple of the notes regarding it, recent departure of senior managers, service outage. So not a lot of things in its favor here from that fundamental standpoint, but I like to always take a look at the chart, see if we can get a little bit broader picture here. 200-day actually coming into play here on Facebook, actually broke below that, but appears to be holding a pretty important level of support right now. So the stock's right about 160, and saw some previous lows in this 160 range. So just recently here, in middle of February 20th through 25th, had a couple of days where it hit that. And this level had come into play as well back in September of 2018. So this 160 level appears to be a level that a lot of traders are looking out for. I'm going to be curious the rest of the day if it manages to hold that or not. But, wanted to jump over to the option market too. Took a look at the Facebook option statistics, with the, negative news here and price coming down. I was pretty interested to see, where the call put ratio is standing right now. Is really high volume on calls. Right now, about 178,000 versus 117,000 on puts. And as it stands now, pretty even between, it looks like call buyers and call sellers here for the day, about 61,000 here on each. Really the one that sticks out, got quite a few more put buyers than sellers. So perhaps some people coming in to hedge those positions here today. But I was kind of curious, thought that there might be either some more people taking maybe that directional approach on the call side. Surprised to see the sellers without a huge spike in implied volatility. Right, still at around its 25th percentile in implied volatility. So implied volatility still fairly low. Looking at the IV30 level on the year. So that's one we'll be keeping an eye out. Does it hold this level? Does it break down? The other thing we're taking a look at here, which I missed on Friday here, S&P. I know Mike had talked about this level quite a bit, that 2,800. Went back and looked at a few specific points and found that really that 2,817 looked to be that really important support and resistance level. Hit it in July of 18, again in October, again in November, and then March 4th as well. Failing to break out a number of times, a lot of times that big sharp reversal that we had here. So, it was good to see the S&P actually pull above that level. If it manages to continue to climb from here, we're going to start to maybe look towards the next resistance around 2865 here, which I found some previous levels on. However, if it does fail, this 2800, 2817 level could be an important one, but. From so the trend indicators we usually look at are moving averages above all of those. So, at least at this point, fairly positive price action that we're seeing on the S&P last day or two. Really, last thing I'd like to see on S&P is just a little more carry through from momentum. Taking a look at relative strength, started to come up a little bit, but still below some of those recent highs in momentum that we had the last little peak on the S&P in February and March. But that's what I'm looking at for levels here right now, and a couple of securities that are on our radar over at Fidelity.
And Trey, I'm curious, did you say Facebook isn't usually in your top 10? Is that what you were saying earlier?
Yeah, it hasn't popped in the top 10 in a little while. I'd say top 20, pretty common. But today it jumped up to, I believe it was fourth last time I looked. Yeah, fourth on our orders by Fidelity customer today. So
that's interesting.
Pretty high on the list here today.
Because that's why I like to talk to different brokers about what pockets of liquidity they attract, because every firm is different, right? And Facebook's usually, when we're talking top 10s, it's lurking around there somewhere, right, in the broad industry. And interesting for you guys that isn't the case. And also interesting what paper is going on out there. I think we'll get to them a little bit when we talk some more about the most actives. But first, let's continue back around the horn. Uncle Mike, sir, what is lighting things up in the scenic land of St. Charles?
The scenic land of St. Charles, all sorts of things. Yeah, so we are above the 2,800 or the 2,817 level with the S&P, and so I think that is an important spot to be at this stage. The other thing, and the next real sign of major resistance is the all-time highs, I think, of anything that's really major. So it's kind of an exciting spot to be with where we are right now in the market space. So that's definitely a thing to where we are lighting up our tapes. Financials have really started to come back a lot today, too, up over 1% on the day. Our XLF is what I'm looking at with that, to be totally clear on things. So excited about that as well. We are at a point now with XLF to where in our covered call or our wheel program that we've been doing with XLF, one of the things that I think it's important to do is that if stocks are depressed in value and you believe they are going to go higher, then it's okay to not sell a covered call for a couple of months. And that's kind of what we've been doing on XLF. But we're getting closer to some levels to where we can start selling some premium on them again. In the meantime, we were collecting a dividend on them. So that's one of the exciting things about being involved with the covered call strategy, or the selling put covered call strategy. So that is something that we're excited about. The fruit company that we like to talk about on the show so much has definitely been, how do I put this, on fire lately. We have Apple has just been going bonkers lately in going up higher. Now, of course, we still have a ways to go before we get to the all-time highs again that we put in a few months ago, but we do have a lot of movement with Apple right now. And there's talk that perhaps it could pull back to the 180 level, because the 180 level on Apple was a level that a lot of people said was a level of resistance. But so far, Apple is having none of that support resistance stuff. It is just going up like it did back in the old days. But with that being said, the old days are still a different day than today in terms of innovation. So that's what's lighting up my tape, Mark.
And last but not least, Mr. Rock Lobster, sir, a lot going on out there. What is catching your eye in today's market activity? Are we still in the monk zone for the VIX?
Well, you know what today is one of those days where it looks like we had the weekend effect marked up. Remember, liquidity providers like discounting vol for the weekend, so they just press the prices lower by cheating. They just move their dates forward on their sheets. So that's a little trick for listeners. They're always trying to push vol down because, well, the public likes to sell it. But that's a whole separate subject for down the road. So I'm going to say, actually, VIX is probably down in real terms today a little bit. And so, again, we're sitting right there. Zone 1 is the hardest zone to cross into just because 3/4 of the time we're in another one. We're in zone 2, 3, or 4. It's really complicated like that. So, but once you're kind of in zone 1, it usually means the market basically has given up. At the money volatility is, like 7-8%, 30 days out, and nobody just gives a darn. And we're close to approaching it. As far as stocks, yeah, I like the fruit company. I'm pretty simple with support and resistance things. So I go, 200 is the next number, so that's probably where it's going to go. Earnings are coming out. I have, of course, no basis for that. But it certainly seems like a lot of the big Q stocks want to get back to where, somewhat close to where they were in September. So that goes, you've got a rally on low vol. 2,800 is kind of in the rearview mirror. And I'm just watching all these things kind of bounce back up. I mean, if Boeing wasn't destroying the Dow in the last few weeks or the last 2 weeks, I mean, the Dow would be kind of clipping along as well. So as far as low vol goes, all of the stuff, by the way, the Fed is going to talk about rates this week, I believe. The whole trade war thing, I don't know who got the memo, but it seems like we're back to where we were, I think everything's going to be cool. Nobody cares about the deficit, so I won't invoke all the stuff I invoked last week because nobody cares. Modern monetary theory is in play, so I guess it works. And people are just looking for upside. The economy is still growing, and this next cycle of earnings. So, I mean, the reality is VIX is about to hit 12. It is. We closed there on Friday, adjusted for the weekend, and we will probably, if we close here today, nobody gives a darn anymore. So usually when nobody gives a darn, we see higher prices until, we don't see them anymore. So that's where we are. And it's not going to surprise me if it continues in that direction.
You know what else is going to continue is us breaking things down here on the trading block. Let's look really quickly. Trey was alluding to what was lighting up the top 10 over there in Fidelity. Let's see how it lines up with the broad marketplace out here. Let's start out top 10. These are equity options. Number 10 is ACB. This is Aurora Cannabis Inc. Something's going on out there because they're only up about 30 cents to about $9.91, but they're doing 106,000 contracts for number 10. Right behind number 9, Netflix, 115,000. Number 8, Amazon, 129,000. Number 7, good old Boeing, still continue to have issues, 152,000. Number 6, Tesla. People apparently not in love with the Model Y. Also maybe worried about a little bit of the increased higher deposit rates required, $2,500, I believe, which is only $1,000 for the Model 3. So people worried maybe there's a bit of a cash crush. Also, just the general news coming out of Tesla lately has been kind of all over the place. We're cutting prices, we're raising prices, we're closing stores, we're opening stores. It's all sorts of madness going on out there. So a lot of that continues to weigh on Tesla and continues to drive a lot of action out there. 167,000 contracts on the tape today. Number 5, good old GE. Ever all year, kind of been a perennial top 10er, if not a top 5er, 172,000 contracts on the tape. Number 4, Bank of America, 201,000 contracts. Number 3 is COTY, COTY. This is, of course, just good old COTY. This is a beauty company, American-based multinational beauty company, founded in 1904 by Francis Coty. So there you go. Number 3, 252,000, also up 30 cents. maybe some M&A or some earnings going on in that one. I'll have to see what's 51% on the calls, so it's pretty much even calls and puts, which is also interesting. Number 2, good old Facebook, mentioned them earlier, 309,000 contracts. They're selling off today pretty hard, yet 60% pretty much of the volume today is on the call side of the fence, which is interesting. Again, as Trey kind of alluded to earlier, usually in this kind of bias in the underlying, you see more directional oriented paper, but we're actually not seeing that. And number 1, good old fruit company, Apple, taking the top spot again, 356,000 contracts. Continues to be pretty much one of the most call bias paper names out there. 64% of the paper, roughly 2/3 coming in the calls. The biggest call bias today is actually this ACB with 81%, followed by 79% in GE. It's, let's say, a little bit more liquid name. So interesting stuff out there. Meanwhile, let's keep on rolling to some more interesting stuff. It is time to go into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, welcome to the odd block. This is indeed the portion of the show where we get weird, we get wild, we get a little whimsical. Let's see, let's kick things off. Boston Scientific is our first name on the docket. Looks like a little bit of the old harvesting of the risk premium, ticker symbol, of course, BSX. Trading today, $37.95, off about 2.25%, about 5.5% out there. This is a name that over the past year has actually had a decent run. Excuse me. With about a year ago, was trading about 10 handles lower, a little bit north of 27, and then it kind of slowly made its way up to about 34 in June, and it kind of kept vacillating on that level for a while. Then it spiked up to 38, actually 30, almost 39 in October. Then it's kind of vacillated around between 38 and 32 for the better part of that time. Then got back up recently into the 40s very recently before coming back off now today to about 38 or so. So it's been an interesting, mostly upward run for BSX over the course of the last year. Let's see what caught our eye. This was actually in a not a hugely active day, but a fairly active day out there. This was the biggest in terms of equity trades we saw going up in terms of unusual activity today. Indexes notwithstanding, of course. It was this trade. It was the April 41 calls going up 13,662 times for 18 cents. Pretty much trace cents off the bid. They were 15 cents at 25 coming out when these went up nearly 14,000 times for 18 cents. This was opening. Let's see. Yeah, looks like Mr. Rock Lobster, we got ourselves a little bit of the old harvesting of the risk premium. Looking at this chart, that 41 level doesn't seem terrible. It's pretty much right around the highs. The 52-week high for this name is exactly 41 even. So I'm guessing someone looked at that chart before they made this trade. I know you're not a huge fan, though, of overwriting so much for so little. So what do you make of this guy putting a lot of contracts behind 18 cents?
Well, 18 cents, it is 18 cents. You know what that says more of? Like, it says more of the prospects of Boston Scientific, right? I mean, these medical device companies used to be great growth companies. And now somebody's happy to sell a bunch of out-of-the-money calls for 18 cents and think that's a great deal. So it's not, I would say it is not a great sign. You have what used to be a pretty decent growth company like, we'll take the 18 cents. We'll take the, I don't know, not even 1% premium on the sale and just figure that it's free money because the stock is never going there. That's what I think about
it doesn't
that.
Speak to a lot of near-term bullish upside for good old BSX. By the way, if you can't do the math, listeners, it's about $250,000 that they're harvesting. So it's not chump change. It's chump change maybe to like the Rock Lobster, it doesn't get out of bed for like $500,000. But outside of that, going out to April for $250,000, you're obviously tying up some cash on this. You obviously have some underlying shares probably to go as well. So if you're looking at this from a cushion to the downside perspective, not getting a lot, 18 cents. So we've seen that come back to bite some of the traders and the trades that we've profiled recently here as well. We'll see how this one works out, but I've got a feeling this guy, if it gets up to 18, or gets up to 41, I should say, maybe he's not too upset about dumping the stock up there. Let's move on. Let's see. Looks like it's kind of a theme for today's action, Mr. Rock Lobster. There's a lot of harvesting of the old upside premium. Next up, if that was a little bit too rich for your blood around the 38 level, listeners, then maybe spooked by this next one, or should be excited by this next one. You got USA Technologies Inc., ticker symbol USAT, trading today $3.88. This is our resident cheapie, off about 6 cents. This is a company that works on the ePort cashless acceptance technology running on their patented ePort Connect service. So there you go. That explains everything about them. Let's look back to obviously they're in the payments arena here. A year ago, this thing was trading well north of where it is right now, trading about $10. So about roughly a third of what it was a year ago. Got up over that period. Looked pretty good back in mid to late summer. Got around the August timeframe. Got up to 1682. So it had a good run. And then something happened, maybe earnings or something else, right around the early September timeframe that just clipped its wings. It went from about 16 down to about 9 on September 11th. Inauspicious day, of course. And then it kind of just continued trading and trending lower from there. And then with a brief spike in February, but other than that, back up to nearly 7. They've pretty much been just all the way down ever since. And Mr. Rock Lobster, today's paper doesn't seem to be showing any signs of a bullish uptick anytime soon. I mentioned that good old call overwriting. Someone looks like they're up to that again for size out here in USAT, blasting out the June 5 calls. First, we saw a block of 10,000 even going up for 40 cents right on the bid. These were 40 cents at 50. This guy wasn't playing around. He didn't dance around for a penny for 41, 42. He said, nope, I want 10,000 and I'm going to get it at 40. He didn't have to go through the biddy, which is interesting. He got them all at 40, which is interesting. Then he kept doing more. He came in for 1,000 more a little bit later, also for 40 cents. Then he came in for 1,000 more, also for 40 cents. Then 750 more, also. So that 40-cent bid was fairly firm out there. He kept testing it. Then 112 more. Someone else piling on probably. So yeah, a total of nearly 13,000 of these bad boys going up today for 40 cents. So Mr. Rock Lobster, not exactly screaming a ton of upside in the near future for this name. But on the flip side, you got a roughly $4 stock. The guy's getting 40 cents, so he's getting 10% of his value just to do this. So does that alter your equation at all, Mr. Rock Lobster?
I think 10% back is a whole lot better than 0.5%.
Yes. That is how the math usually works.
I'm not great with upper math sometimes, but that sounds better. I like, and you know what's funny is the bid didn't leave. I think there would probably be a 40-cent bid for a June call there for about 4 weeks because that is, I mean, it's 100% vol, and you would think like, wow, that volatility is really high. 100% vol is high in Amazon. It's high in the SPX. In a $3.89 stock, it's not that high. So, because it doesn't take much for the stock to move. So, at least on a percentage basis, you get a 40-cent move. Woohoo! That's a 10% move all of a sudden. So, it doesn't take much. So, it looks like there's a seller. It looks like buy writing paper. On the flip side, it's 100 vol. You're like, woo! It's 100 vol. But then you realize the stock could be up $1 in no time at all, or whatever. So I think the price of those calls could go down for sure. But it looks like the kind of if you're a juice junkie, it has some appeal. And that I could see both sides of that case. I could see the buy right case because the stock's at 1 year, 1 year, 2 year lows, and I can see the juice junkie case where you're like, okay, I'm going to make a guess that it probably will move a little bit between now and June. This is, again, not knowing anything about the stock. It doesn't look like it's definitely kind of in the basement-esque. So, we'll see what happens. But and an interesting trade, and it still looks like there's no end on that strike. So yeah, the strike with really any juice. The June 7.5s are a dime bid, which to me is a little curious because if you just spent 40 cents for 13,000 of the fives, why would you want to pay a dime?
Do you really want to pay a dime for the 7? Yeah, I think this guy was a little surprised too. He's like, okay, I'll get 10,000. How are they now? Oh, they're still there? Okay, I'll take another. Can I get another 1,000? Okay. How are they now? Oh, they're still there. Oh, can I maybe get another 1,000? That's how it went. It's kind of. I think he was more surprised than anybody. I could still get. They're still 40 cent bid. Okay. Apparently, someone has. You're right. Has an endless demand for upside here in USAT. Interesting, listeners. I'm sure I'm on the market maker course. Yeah, interesting one. I could see this one a little bit the polar opposite of the one we were just talking about. This one actually gives you a decent cushion to the downside to the terms of 4 cents. 40 cents could come in handy when this $3 stock is selling off. So interesting stuff. Let's see if we can keep that love alive here for the third and final name here. More call paper. This time, let's see if we're still overriding. What is our ticker here? We got FIZ, F-I-S. This is Fidelity National Information Services. So sounds familiar. Also headquartered in Jacksonville. Trey, you up to some action over here in Jacksonville?
No relation to our Fidelity, but I do drive by their office quite frequently. It's right downtown. So.
How hilarious is that? Another Fidelity also in Jacksonville. Interesting stuff out there. Let's see what they were up to today. A FIZ by the name, 1 year track record. Let's see, a year ago they're trading about 108 right now, and off about $0.75. And let's see, about a year ago they were trading about 100, so they were a little bit shy of where they are right now. They got down over the course of that time to about low 90s, 93 or so in April, and then they gapped up to back over 100 again, hit a high of about 112. Looks like it was in a couple of times they flirted with it back in September and again in February again. So they flirted with it a couple of times. It's been kind of vacillating around this roughly mid-90s, to a little bit north of 100 level for the better part of the last year. Let's see what we saw in the paper that may interest us. It was the APE 110 calls going up for $1.85. These were $1.70 at $1.86. So pretty much right off the offer. The broker said, I did my job. I got you a penny. These were opening, again, 9,573 times. So Mr. Rocklops, looks like we're flipping the script now. Someone says, the heck with all that harvesting of premium. I want to spend some premium and get myself some upside. And it's at an interesting level, too. They're not quite at the money, but they're slightly out of the money. And they're flirting not that far away from the 52-week high for this name, which was 112.17. So once factor in the premium this guy pays, and effectively he needs it to hit that new 52-week high for these bad boys to really start paying off. So I'm going to go out on a limb and say this probably isn't your favorite trade of the world, but what do you think on this one, sir? Call love and FIZ.
It definitely is a little bit. I see the call love, I see the upside, financial, technology, all that kind of stuff. I almost could have sworn a Fidelity named company. I don't know if it was, the granddaddy Fidelity, the mutual fund powerhouse that does the show, or another Fidelity that was buying somebody. I thought I read that in the journal this morning. And that could be a reason for it. I'm not sure. Yeah, global payments giant to be created with $35 billion FIS world pay deal. So if that's the same FIS, maybe it's related to this ARB. Maybe somebody's trying to hedge a risk ARB, something along those lines. It's a stock and cash deal. It might be like, woohoo, they're going to be a gigantic thing. It'll be super huge and big, and they'll make lots of money. So I guess there was a time when companies acquired other companies and their stock prices shot up. So maybe somebody was looking for that similar type of deal with this. So I think that it could be something to do with that.
That could also explain why our other friend was so busy overwriting in the other payments name today. Maybe he saw that this merger maybe puts a little bit of upside on the other name. So taking the opportunity to blast out that bid many times while it was still there and continues to be there. Interesting. Two sides of the same coin here in the payments realm with FIZ and USAT. Meanwhile, we have to keep on rolling It is time for Trey to dive boldly into his first ever block of strategery.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. This is the portion of the show where we break down educational topics. And, Trey's been listening in about all the different bits of strategy Uncle Mike has been putting out there. And he said, you know what, I'm on the strategy desk. We get a lot of inquiries. I want to share some of that with the world, too. So, Trey, I know you guys get a lot of inquiries over there these days around hedging portfolio. So what do you have in store for us today, sir?
Yeah, thanks, Mark. I checked with a couple of my colleagues in my absence last week what was going on. Found out we were actually getting quite a few clients calling in just for that reason, right? Want a portfolio hedge. And, so I wanted to dive into just a few of the things that, we generally look at when considering a hedging strategy. And I think, a lot of our Fidelity customers here are customers who come from kind of that long stock portfolio. And a lot of times hedging is actually their first dive into actually using options, coming in to use this to maybe get some protection here as well. I thought it was kind of an interesting time. It seems we get the hedging calls, generally when we start to see these nice uptrends up, maybe clients are thinking they are, we're going to see that end at some point, want to get some protection while it's cheap. We tend to get a lot of calls, after a big drop in the market as well, when often it can be a little bit late. So maybe some things to think about ahead of time. Really the strategy that we're talking about with hedging a long stock portfolio are long puts. And there's a couple of different ways to go about it. But I often say, let's start with taking a look at your portfolio and find the best proxy. If you're only holding a couple of stocks, for example, you may be able just to look at puts on those individual positions. But for most people, they're going to have a few more than that. So we'll try and find the best proxy index. Now, S&P tends to be a popular choice, but I always encourage everyone, hey, look at the actual makeup of your portfolio. Many of our portfolios tend to fall in line to something similar with the S&P, but if you find yourself in a portfolio that's maybe, very heavy international or very heavy small cap, maybe we need to find another proxy. So that's really the starting point here for us. Assuming the S&P is a good proxy, next step, which way are we going to play it through SPX options or maybe SPY options, two very popular ways to do it. Always just like to remind everyone the big difference between the two. A couple of the big differences, SPX gives us that benefit of European style. We can handle these options in cash when it comes to expiration, not having to deal with actually holding the underlying, right? With SPY, it's something we have to be a little bit, more cognizant of, right? If that hedge actually kicks in, works out for us, we may have to exercise and be short some shares. So we want to make sure we're obviously paying attention every day, but especially so on expiration Friday, coming in and making any adjustments as needed. The other thing too, think about the amount you're hedging as well. So, there's plenty of clients out there with, hundreds of thousands of dollars or $1 million portfolios. SPX has the benefit of that higher notional value, but if you're hedging a smaller account, maybe only hedging $100,000 portion of equity, SPY has some benefits there. You can do that with just a couple of contracts of SPY versus maybe buying more protection than you actually need with the SPX here as well. So maybe continue on, think about using SPY here for our example. What have we actually bought when we bought a put? Well, we've got the right to sell SPY. And if the market does get that turn down, big turn down here, right? We do have the right to sell that here at any time. And in the event that actually happens, I think timing can be an important consideration here. If you're putting on a hedge, maybe start to look for some support levels in the market. If we get that drop down, wait for that evidence that the market is beginning to flatten or turn back up as a possible consideration before actually closing that put. The one thing that I think a lot of people don't consider when it comes to hedging, though, is really the biggest disadvantage is cost. If you are someone that's trading this long stock portfolio, you're trying to do that for the long term, right? We have to start to consider that cost of buying puts, especially if it's something you do over and over again, can really begin to hinder that performance. A couple of things we can do to reduce cost. If you're hedging maybe some individual positions, something like a collar strategy where we sell collars to offset it may make sense. Even something like a bear put spread can help you reduce the cost at a little bit of a trade-off of reducing that ultimate protection you have in the event of a very big slide here as well. But the other thing too that helps with cost is really just thinking about your strike selection. Many clients will come up and look at, right away, hey, maybe I should look at an in the money or at the money put. But those can be very, very costly. And most of the time I'd say, right, hey, if you're looking at the money or in the money, is hedging really the appropriate? If you can't bear any loss, maybe the conversation is more towards, how much exposure you have right now. But by going out of the money, you're going to save, a little bit of money, looking at lower premiums. We're just getting less of an impact here right away. But the way to think about it, ask yourself what your pain point is. Hey, if we drop down to a certain point, where do I really want this to kick in, and begin to benefit here for me? We also want to be thinking about expiration selection. Near-term expirations give us that ability to pay a little less premium, right? Hopefully, lower our cost. Longer term, we're going to pay more upfront premium. But really, you want to consider how long you actually want this hedge on, right? If you really are looking for an intermediate or a longer-term hedge, a longer-term option, we are going to have that lower rate of time decay versus the near term, versus something that you're doing over and over again. But this is a question I think you really want to ask before putting the hedge on. Hey, where's my real concern here? Am I concerned over one specific event? Am I concerned over, particular area on the chart? And try and be as specific as you can with timing here as well. Last quick thing I bring up too, make sure you're paying attention to implied volatility levels. And I think this is where a lot of our clients are, starting to look at things now. Hey, we're seeing the VIX come down. We're seeing, low implied volatilities across the board. This gives us the benefit of, these puts being a little bit cheaper to purchase here right now. And, one of the benefits, in those events of the sell-offs, well, what happens with volatility in the markets, right, tend to spike up. We got two things that are ultimately working for us in those cases. But pay attention. Again, the timing is critical. When we get that dip down, if we start to stabilize, you might see volatility beginning to come back in. Think about that exit of the hedge here from there. Ultimately, right, with hedging, just say, ask yourself really your specific time frame, where your pain point is. Make sure you're picking the best proxy here overall. And if you can really narrow that down, I think that's going to give you the best chance when looking at buying put options here for portfolio protection.
Thanks, Trey. That was really good. The only thing I would really add to that, to what you were saying on this, was that the other way with which you can add to hedge is that, let's say you have a 401k plan through your employer. And I'm going to oversimplify everything to the nth degree here, but of course there's a lot of things to consider with this. But let's say, for example, that you have an S&P index fund in your 401k plan and you don't have the ability to do any options within your 401k. One thing that you could also do is you could buy put options on either SPY or SPX in a separate account as a way of hedging your 401k if that's something with which you wanted to do and you didn't have the ability to do it. The other thing to consider with this is that, let's say that, and I've had clients do this before, let's say that they've bought an annuity a few years back and didn't quite understand the surrender fee structure to it. I've had clients come to me with that, and they're like, oh, I'm kind of stuck in this annuity for the next 6 years, and I don't really have this protection on it, and what can we do? Same concept, you can have a separate account, and you can actually hedge within a separate account if you're in something to where you can have market exposure, but you don't necessarily have the protection. So I think that was an excellent strategy block, and I think that just to add to that, you're able to do everything, pretty much everything that Trey said, but you're able to do that in separate accounts as well.
Well said, sir. Now we have to keep on rolling into a quick but very important edition of the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. And I say it's going to be important today because we have a very important topic to discuss. A lot of you guys have been waiting with bated breath, waiting with anticipation for this time of the year. I know it's March Madness coming up, but forget that. You guys are really excited about our big annual tourney. Yes, it is time for the return of Broker Madness. Yes, this is where we pit all of the top options brokers on the planet at each other's throats for your own enjoyment, as well as for your chance to win fabulous prizes. So what could go wrong with that? And so we posted what our list was from last year. Had you guys send in your suggestions for who you think we should include. So I wanted to share them with some of you guys here on the show, because our rankings, our tourney is going live this week. So we want to make sure these are all followed up. So first, I will read to you guys who are. Remember, we can't do 64. There aren't 64 brokers that are viable on the planet. Not even really 32. It's hard. You can make it to 32, but you're squeezed. In fact, it's when you're talking options centric, it's hard to really even get a solid 16. So we kind of limit it to 16. We had a lot of you guys send in other suggestions to try to get us beyond that. We'll see. I'll read off some of your suggestions and see what people think. But last year's list was in no particular order. We had Ally Invest, which is, of course, the former Trade King options platform. We had Choice Trade. We had Trade Hawk by Tradier. Those are our friends who came on the show before talking about their platform. E-Option, E-Trade, which now has acquired, of course, Option House and Option Monster. Fidelity, may have heard of them. First Trade, Interactive Brokers, Lightspeed Trading, Merrill Edge, Robinhood, who was a newcomer last year, this year a little bit more established in the space, Schwab, which is, of course, the former OX platform, Sogo Trade, Tastyworks, another newcomer to the space, and the TD Ameritrade, who has the TOS platform and TradeStation. So first off, for the three of you guys there, those were our 16 from last year. Can you guys think of any that we're missing or you'd like to substitute? You think we should substitute in this year? If so, now is your chance to chime in.
Off the top of my head, I cannot.
Wow, I have to say that list is pretty complete.
Now, we had a lot of listeners write in, and interesting, Trey, what's interesting about this, too, is that I think Fidelity's performance a couple of years ago on this thing, shall we say, not that great performance in the options realm, is kind of what got us on your radar a few years ago. Greg and some of the team reached out and said, hey, what can we do to get more in front of the options audience? Because and so that's kind of what led to all this. So in many ways, the Broker Madness has a lot of resonance for the Fidelity folks. These are some of the suggestions people have written into us. Let us know what you think. Maybe we could swap one or two of those on that list for these. Again, just listing 16 option-centric brokers is a challenge in and of itself, let alone getting beyond that. Some people suggested the Capital One Share Builder, a platform I'm not that familiar with. Wells Trade, which is an interesting one. There's a self-directed brokerage from TIAA CREP. Someone wrote in for the Nadex folks. They do binary options, obviously. Not quite the same thing, but not bad. Of course, if you want to get beyond, you get into some futures options realm. You got like RJO. Tradeovate also does futures options. Insignia futures and options. You get Apex. They have a futures arm that does options. The eRoom guys, those are more institutional. Ninja Trader does options on futures as well. So we could expand it if we want to go beyond. So I'm curious. I'll let you guys kind of be my arbiters here. You like that list of 16? Think maybe we should swap in a few, like maybe Wells Trade growing on the horizon there. Nadex maybe for the binaries. What do you guys think?
Well, I think if we want to stick with equity options, I think we're pretty good. I mean, I don't think we want to get into the futures options for this tournament, do we?
That's the only way we can get it up to like even close to 32, right? People are saying, well, get it up to maybe something closer to 64, right? Even that closest, if you're going to start doing that, you have to start talking futures options and stuff, right? So
that's true.
So I think I'm kind of good. I mean, we might tweak a couple of these because there are some of these that most people, even getting out to 16, there's some names that most people are not that familiar with. So it's a challenge. But yeah, you guys have written in with your suggestions. I'm giving you your chances now. Mr. Rock Lobster, any great grievances with this list?
And I'm usually the king of umbrage and grievance, but I don't really have one with this list. I think this is a pretty decent representation.
All right, and Trey, are you happy with your list of competition this year that you want to mow these guys down?
We're ready for it. Yeah, I'm pretty biased. You've got the best name on the list on here, so.
Now we got to see. See now.
That's why I'm really on the show, really to influence, really influence this contest. So.
That was a driving impetus behind it. Now we got to see. Now it really is down to a lot of the brokers too. Once we start playing, once the tourney begins, once the battle commences, it's up to our listeners to vote and to readers to vote and our social media followers to vote. But also for the various brokerage platforms, we've seen a direct correlation. The ones who get behind it the most tend to fare better in the tourney than the ones that don't. So interesting stuff. So you'll have to muscle some of your folks over there at Fidelity, Trey, to put some of their muscle behind this, so we could see how well you guys fare this year. But interesting stuff. Stay tuned for that. All the bracket stuff will be coming out this week, and we'll start the battle. Don't worry. I just wanted to give if anyone had a chance to air their umbrage, this was it. So listeners, you guys have sent in some good suggestions. We'll mull them over. Maybe one or two tweaks to this list, but I think this 16 is pretty representative. Unless we start getting into, again, the futures options and everything else, which gets pretty far afield. But maybe for future tourneys, we shall see. Meanwhile, though, let's keep on rolling to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, time to go around the block, talk about what we're keeping an eye on for the rest of this week. There still are some earnings on the docket. Lumber Liquidators having some issues today. Overstock, which, as we know, pivoted into the crypto realm. They're also today. Tomorrow, FedEx. Wednesday, General Mills and Micron and Williams-Sonoma. Thursday, Nike. And Friday, Tiffany. So still some names on the docket for you guys who are out there paying attention to all things earnings. Remember, head on over to theoptionsinsider.com. We have an earnings move report right now. Actually, earnings move results report up there right now for Lumber Liquidators. Looks like they were pricing it. They were at $10. They were pricing in about $1 and change, and they delivered almost exactly $1 and change. So they're pretty much right in line with their straddle out there right now. A lot more of those reports, courtesy of our friends over there at ORAT. Check them out at theoptionsinsider.com. Let's go back around the horn. Let's go the other way. Let's start with the Rock Lobster. Sir, what are you watching for the rest of this week? Shall we call it the week of the monk, as VIX is clearly in the monk zone?
It is in the ultra. It's something, we're having something sort of below, it's like in the iceberg zone. It's so cold, it's not moving. And if it stays there, we have a little Fed. Do we have some inflation? Do we not have inflation? Do we have, I don't know. I'm confused. So all it looks like is right now, VIX is up 30 cents. Nothing's happening. The SPX is moving along. There's some Q stocks up, and it's March 18th, but it looks like the summertime is here already. And I know it won't stay like that, but for right now, people are just waiting for a trade deal, man. And golly jeepers, who knows what will happen when we see that?
Golly jeepers. I told you last week at that conference I was at, there was some people pontificating about the return of a new 10-year cycle of low rates. So if that's the case, then the Fed will be, shall we say, on the back burner for quite some time to come. I'm not sure if I quite agree with that, but at least for the near future, I think the Fed might be a little bit muted in their actions. Uncle Mike, sir, same question for you. What are you keeping an eye on for the rest of the week until we gather together again on Thursday?
Well, golly jeepers. Sorry, couldn't resist that one. Definitely watching the Fed if anything does happen. But just wanted to see, like Andrew said, like the trade deal. We have that going. And wanting to see, I'm curious to see if Apple can make a run at 200. I mean, with the momentum that they have had, it's not out of the question. But I could see it being 180 or 200 the next time we speak. Fun to watch.
Yeah, it does seem like those 150 puts that everyone was hand-wringing about. Remember, a lot of our polls, they were scared to sell those. Now look like a distant memory. So how the worm has turned, at least for the near term here, in Apple. Also sneaking out some new iPads without even an announcement this week or even today. So interesting stuff going on out there. And last but not least, Trey, sir, what is on your radar for the rest of the week, sir?
Yeah, like everyone else, certainly paying attention to the Fed here on Wednesday. The other thing that caught my eye, I'm going to keep an eye on, is the Russell 2000 here. I was looking at a chart comparing relative strength with the S&P from the year lows. And Russell, pretty much through this whole period had been, really outperforming. But, over the last, week or so, started to underperform here a little bit. So going to watch the Russell, see if it can pick back up. It is still below its 200-day moving average here, but approaching it. So I'm going to keep an eye on that, see if it can approach that level, and which is near, where some of the recent highs were in March. So thought it was a little interesting, a little different than some of the other indexes. S&P and NASDAQ, had broken some of their recent highs. Russell, although outperforming, still hovering below those recent highs. So keep an eye out that, see if it can get some traction from the small caps.
Unfortunately, listeners, that music means we've come to the end of our journey. Our friends over there at FTSE Russell like to be hearing you talking about Russell. If you want to hear more about Russell, of course, tune into our TWIFO program every Thursday, 1:30 p.m. Central, 2:30 p.m. Eastern. Speaking of other programs, I mentioned before, we're moving all over the place with that Crypto Rundown show. Usually it's at 4 o'clock. Today it's going to be actually recording tomorrow. The schedules for the guests on that show, they're all over the planet, and it's like herding cats sometimes. But don't worry, we'll get you a show in there tomorrow. So if you're hungry for all things crypto, you'll get it. And if you listen on the podcast, it'll just be probably a few hours later than it normally is. So not a big deal for you guys. But let's go back around the horn. Let's go the other way again. Let's start with Trey. Sir, while you guys are gearing up for battle in our Options Broker Madness 2018 tourney, what can our listeners look forward to from you guys over there at Fidelity? And also, if they want to learn more, maybe they want to reach out to the strategy desk, where should they go? What should they do?
Yeah, absolutely. For those of you that are not Fidelity customers, certainly we'd love to see ourselves higher in that Broker Madness rating this year. Come over to fidelity.com/options. You can learn about our options, trading here, some of the benefits that we have over some of the other brokers you may be looking at. Great place to learn. Hey, if you're already a Fidelity customer, we appreciate it. Feel free to give our strategy desk a call. You can also check out our upcoming schedule of events on our Learning Center. We list all of the coaching sessions that we do on there, as all of our contact information right there.
There you go. Check them out at the Fidelity Trading Strategy Desk. Ask for Trey. He'll love to chat with you about hedging portfolios or whatever else is top of mind for you guys over there. And if you like them, if you use them, give them a vote in our tourney. And we'll see how they fare this year. And Mr. Uncle Mike, sir, if I want to, let's say I'm motivated to click on a Fox. Where should I go? What should I do?
By all means, go to stcharleswealth.com. And if you're also motivated to come talk about trading in person at the world headquarters of St. Charles Wealth Management, come to our meeting, St. Charles Investment Club. We're on meetup.com. April 11th, we're 98 members strong, so I'm 97 or 98, something like that, but we're trying to make it over the 100 mark. We're really close, and check out our meeting. Would love to have you. We are going to talk trading, and it is a ton of fun.
And, of course,
April 11th.
Guaranteed Skippy Zeros and Lemonade if you show up, so get out there. It's delicious. It's good
Not quite.
stuff. All right, stcharleswealth.com to learn more. And last but not least, if I want to learn more, Mr. Rock Lobster, about the Monk Zone or anything else from the world of VIX or options, where should I go? What should I do?
Skippy's Euros and Lemonade, man, that's a deal. I'll take it.
You're going to fly in for it, aren't you?
It might even be worth flying out there. Our masterclass on long-term investing with options starts tomorrow. Plus we also have to give Longo an excuse to say masterclass.
The masterclass.
So if you want to learn how to use options the right way to help increase potential returns and help hedge those nasty risks, that's what our class is for. Learn how options work, and you will become a better option investor. Just an idea.
There you go. Check them out, optionpit.com. You too can take a masterclass. And on behalf of Mr. Rock Lobster and Uncle Mike and Trey and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, sending in questions, for your suggestions for our Broker Madness, for your forthcoming votes. We're going to love all of it. We want to thank you for all of it, and we'll see you back here for more shows tomorrow at Crypto Rundown and everything else. And for this program, we'll see you back here on Thursday for more of the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.